In this video, I'm going to be discussing how to get started in investment for beginners. Whether you're looking to go on that nice vacation, looking to save up for that car, or you're just looking to grow your wealth in the future, then this video is for you. Have no fear, I'm going to be covering absolutely everything from basic terms all the way up to different investment options of how you can get started. Before we jump into the world of investments, we need to make sure that we're all in the right position to be able to even start investing. So first of all, we need to make sure that we have an emergency fund available. Now you may be asking, what is an emergency fund? For example, let's assume you lost your job today and you are unemployed. You have no money theoretically set aside to look after you, to pay your bills, and so on and so forth. So before we even start investing, we ideally want to target 3 months for our emergency fund. So let's say that your monthly salary is £2,000. Ideally, we want to have £6,000 in our emergency fund. This can be done by putting a small portion of your salary at the end of the month aside into an emergency fund. Ultimately, this will give you peace of mind knowing that if you go through a hard time, you have that money to fall back on until you get back on your feet. You should not be investing until you have at least that 2 to 3 months emergency fund buffer, because it will give you peace of mind emotionally. Now, the second part before we start investing, we want to make sure that this is actually seen as an investment in itself, is making sure that we're paying off any high interest debt that we have. So if you have high interest debt, then you need to explore either consolidating that debt using a debt consolidation, or you want to be looking at how can you pay that off in the quickest way possible. If you manage to do that, ultimately you're going to have more resources on a month-to-month basis, giving you more cash to invest as a beginner. And if you're interested in looking at debt consolidation, then look at money supermarkets. You can see on there they've got plenty of different options for consolidating your debt, and this is one of the first steps that you want to take from your investment journey. Now, once you're in the position to start investing, especially for my UK listeners, we want to do this in a tax efficient way. And this is with an ISA. This is the best way to get started, and there's a lot of tax benefits from using an investment ISA. So we're now going to talk about the different investment options you can do as a beginner. I just want to make sure that we fully understand the financial terms that we're talking about so that we're all on the same page. So what is a stock? Simply put, buying a share within a company is giving you part ownership on the future growth of that company. So for example, if I bought a share in Facebook known as Meta, if the stock goes up in value and they make more money, then I get to join that journey along with them and also profit off of the back of owning that share within Meta. Secondly, what is the stock market? The stock market is overall the exchange of where all these companies are listed, and investors go to that exchange to buy different companies in the hopes that they will make future profit from those companies growing. There's so many companies to choose from, and this can often get confusing. So we're going to break down exactly what you should be looking for as a beginner. Then we've got risk versus reward. This is super important to understand. Obviously, the more risk that you have, the more volatility you're going to see within your portfolio, with the more potential downside, but also with this risk comes more volatility within your portfolio, meaning you can experience deeper downturns on your portfolio or deeper losses. The less risk you have, you still have that potential to make gains, but obviously be a lot less than someone that is more aggressive within the markets. Then another term that we've got is index funds. So rather than buying an individual stock, you can buy a group of stocks under an index fund, which means that you have exposure to a large basket of stocks rather than having all your risk on one specific stock. This is great from a diversification perspective, but it's also great from reducing your volatility perspective because you have exposure to a vast majority of companies. This is a really good way to get started. It lowers your risk, and it also lowers the amount of work and energy that you need to put into actually investing. So we're going to be talking about index funds slightly later. So now we're going to get started on 3 different ways that you can start to invest as a beginner. First of all, I want to go with what I would say is the most risk-averse method and work our way up to the most adventurous. So when you start an investment from a beginner, it can be quite scary, it can be quite nervous. So I suggest that the first place that I would explore is premium bonds, okay? So premium bonds, what are they? Well, first of all, you can look at this a little bit further on nsandi.com. I'll put the link in the description. Overall, it's a fun way of investing that has zero downside risk. It's protected by Her Majesty's Treasury. So for every pound that you put into this, it's almost like a lottery. And the more pounds that you have in there, the more tickets that you have, and then the more numbers that go into a monthly draw. And each month, a winner will be selected, and you can win anywhere from £25 all the way up to £1 million. Now, one of the best benefits about this is there is no downside risk, but also it is tax-free gains. So those are two very, very important factors about premium bonds. So if you are very new to this and you're very scared of investing, this is arguably one of the best ways to get started. No downside risk, and the upside of winning potentially £1 million in tax-free gains. It's also got a low barrier to enter, so meaning if you don't have much money saved, you can invest as little as £25, which is a fantastic entry to be able to get involved in the space of investments. Now, for some of those that are a bit more equipped for the markets, 50,000 is the max that you can put in as an individual into premium bonds as well. Now, to give you an idea, obviously you're not going to be selected a winner all the times, and obviously the less amount of money that you have in there, the least likely you are to be selected. So the more pounds you have in there, the more chance of winning. But a good stat for you to say is that overall the gains are above 4% per annum on average. So if you're looking at this from that perspective, you have zero downside risk, and your average return over a 12-month period is above 4%, and you also have the upside of winning £1 million tax-free gains. So this is a very good way to get started in the investment world. The second one we want to look at is index funds. Now, index funds, as I mentioned before, is buying a basket of stocks. Now, this is ultimately one of the most simplest ways to get exposure to the stock market in a way where you don't need to sit there monitoring and managing it on a day-to-day basis. So one of the ETFs that I want to talk about is the iShares S&P 500 ETF. Now, this gives you exposure to the whole index of the S&P 500. Ultimately, that means that you have your risk spread across 500 of the top performing companies within the US. So what is the S&P 500? Ultimately, this is 500 of the largest companies within the United States. If you were to buy the iShares S&P 500 ETF, that means that you'll be buying one ETF which holds a basket of this 500 companies, ultimately giving you a very much diversified portfolio across 500 companies. This is a great way to get started because it means that you are buying into some of the largest companies within the US, and ultimately it is tracking the performance of those companies as a group. So from a performance perspective, the S&P usually always goes up over time. This doesn't mean that you're not going to have downside volatility. Just like what happened in COVID, the stock markets did sell off aggressively, but they have then rebounded and continued to gain past that. So if we look from a gains perspective, in the last year, the S&P 500 ETF has gained over 21% gain. That's a fantastic return over a year. Now, over the last 5 years, it has returned over 100%, which is fantastic again to know that whatever money you put into that ETF 5 years ago would be worth 100% more than what it is now. So that means if we put in, say, £2,000, that would actually be worth £4,000 within the S&P 500 ETF. This is one of the core basic ways to get started. And ultimately, you may now be wondering, how on earth do I even invest in the S&P 500 ETF, and where do I find it? Now, I thought about this, and there's two really simple ways that I would suggest looking into this, and those are two friendly apps. I'll link them in the description. One is called FreeTrade, and the other one is called Plum, on both of them are very simple mobile apps of which you can put your money into, and you can then go and purchase the S&P 500 ETF on both of these platforms. What I've also done is I've linked in the description FreeTrade. If you sign up using that link, you can actually get a free share worth £10 to £100, which is amazing. So it's a good way to get started as well with reducing that risk to investing. So all the best on that one. But ultimately, from an ETF and index perspective, I would definitely be looking at focusing on something as simple as the S&P 500 ETF. And let's not get this wrong, you are going to witness downsides and volatility, but over the last 14 years on the S&P, we can say that it's actually grown on average over 30% per annum, which is ridiculous. If If we look a lot more longer over the lifespan, you should expect the S&P 500 ETF to produce hopefully 9% and above per annum on an average year. So secondly, the next best ETF to get started with as a complete beginner is using the app called Plum and investing in what I like is the technology fund. So this is run by Legal and General. You can see here on the phone. This Legal and General Global Technology Index. It has exposure predominantly to NASDAQ index stocks, which is seen within the world as technology stocks. And we all know that with AI and the world that we're moving forward with, technology is very much driving that growth behind that. This is a fantastic way to see exactly what is achievable by investing specifically within tech. To give you an idea, the index is known as Legal and General Global Technology Index, but on Plum, it's known as investing into tech giants. Now, the growth has been fantastic, as you can see on the chart here that I'm scrolling through. You can see that, investing in a 5-year period, there has been 192% gain over the last 5 years alone. And within the last year, there's been over a 38% gain investing in just on the tech giants. Again, this is super easy to use and proper user friendly using the Plum app. It's a great way to get exposure and making it very simple to get started in investing. Those two are the basic entries that I would get involved with investing into stocks. Ultimately, they're super simple to get started. It's very easy to understand, and ultimately you can do it all via your mobile phone. So far we've discussed premium bonds and then we've discussed index funds. My third and final one to talk about is property. Now, a lot of people do not have access to be able to purchase properties because you need a large amount of money from a deposit basis. So one of the ways around this is using a company called Tab. To look more into Tab, you can go to tabhq.com. But ultimately what you're doing is you can buy into and have exposure to properties with as little as £1,000. Now, I really like this perspective, and to give you an idea, I'm happy to show you my portfolio. I've got over £400,000 in exposure to Tab, and that generates me over £40,000 per annum. Now, what I really like about this from a perspective of investing in property is that you don't have to have large amounts of money. For example, if I had £5,000, I could actually have exposure to 5 different properties that are all generating a monthly income for me. Now, to break this down, there's different types of investments. I invested recently into Travelodge, of which I actually part own the building. That pays me a monthly rental yield, and it also gives me the gains to capital appreciation. Now, there's a lot more opportunities like this that will be coming to the Tab dashboard, which are very, very useful for beginners to invest in. And I always think that property for people investing from a beginner perspective is simple to understand. What I really like about Tab is commercial bridging loans, of where I invest into a developer who is going to refurb, say, a hotel, which will then have a higher valuation after completion, and then they can go and refinance that with their bank, or ultimately have a higher valuation in selling that property, and that would be their exit. So you lend that money, you secure it against the property, and in sometimes speaking, loan to value is anywhere between sort of 50 and 70%, meaning that ultimately if the developer was to default on their loan, you can recover your loan from the value of the property being sold. This gives a huge amount of security because it means that ultimately, yes, you have investment risk, but if that developer stops paying their monthly interest, then all the locks would get changed on the property and it would go to auction and would be sold. Knowing that, for example, if that property was worth, say, £500,000 and you had a loan to value on it of 50%, that they would only have to recoup £250,000 from a £500,000 valued property. In that rare scenario, if someone was to default, there is a high chance of you recouping that money. Now, ultimately, the returns seen on this, you'll be able to see it on my dashboard, are actually in the region of 10% or higher. And I really don't regard this as a high risk. I would say this is very, very low risk. And I only like to invest in loan to values that are below that sort of 60% range, because I think it gives me a lot more power of the value of the property that I'm leveraging my money against. So now I'm logged into the Tab platform. You can see that my portfolio here in December was 300,000. My portfolio value is now 400,000. I've actually increased it. But you can see after having £300,000 invested in December, my interest that was paid out to me was 2,671, and the return on investment was 0.89% with an annualized return of 9.35. You can see here, look, I've got a 10.31, I've got a 10.07, and I've got a 10.88, all over 3 different properties. My 4th one will show up just after the 10th of this month when Travelodge has officially paid me out, which would be amazing. But you can see how I've got different exposure here to different properties, the loan amount, and also the completion date and when I'm expected to get my initial money back. Every single month on the 10th, I get paid out. Now, ultimately, if I'm investing £100,000 into each property and that property is worth a larger amount of money, whereas if I was to invest in property directly, I would have potentially my mortgage on the property. That is a risk. And obviously if I had a tenant, I've then got to manage that and hopefully that they keep on renewing. We don't have any issues there. With this, it completely avoids that. I put my money in, I start earning from the 10th of every single month my agreed interest on that loan. Now, the benefits of that is I get paid every single month on the 10th. Fantastic. That will then go for the entire term. At the end of the term, I'll get my full funds back on top of my interest that I've been getting every single month. In the worst case scenario, which has not happened to me, but if it ever did, it means that the developer or the person that has borrowed the money from one of these properties would default on that money. And then part of the agreement is that you can basically take ownership of that property and change the locks on the door and go and put that property to auction to recover the money that you have. So in my worst case scenario, I would assume that it would take me maybe 6 months to actually get my initial money back. And overall, I haven't lost anything. I've just lost that time in recouping that money. Again, this has never happened, and I don't know anybody that has happened to, because ultimately with the loan to value, your loan is actually marginally small in comparison to the whole value of the property. And some of these developers are actually putting personal guarantees in place as well. Which is fantastic to see, and it gives you more security actually investing on that side. Another benefit of that is a lot of the properties that you invest in are already rental yielding, meaning that they have enough money every single month to cover the interest that they're paying you. So ultimately it's very low on the risk of defaulting. So you can see the 3 different properties that I'm in and how this is generating me £2,671 every single month without doing anything. It's very hands-off. It's a lot better than leaving my money in the bank and getting the interest rates there. It's higher return than what I would get in premium bonds. And ultimately, it's higher returns than the S&P on the average at this moment in time, being around 10%, 10.3%. So I don't have that volatility. And it's a very, very easy way to get started in investing. So ultimately, I've discussed 3 different ways that you can start today from investing from a beginner's perspective. These are just the areas that I would get started in if I was to do my entire journey all over again. And I think ultimately they're very user-friendly to get started, and they're very easy concepts to understand. So if we just run back through those again, first of all, we have premium bonds, virtually no downside risk, protected by Her Majesty's Treasury. It is tax-free, and you have the upside there of average to achieve over 4%, and also the chance of winning £1 million that's tax-free, which is fantastic from that side. Again, very low risk. The medium one that I looked at was looking at FreeTrade and also the app called Plum, the S&P 500 ETF, and then also looking at tech giants on Plum. Both very, very good in perspective of a diversification perspective, and also from an upside perspective, very hands-off as well. And then finally, we have got Tab Property, which is a fantastic area to gain exposure to multiple properties with having very limited downside risk across these loans, or via investing into some of the properties that they have on their platform and earning anywhere between 9 and 10.8% per annum and getting paid every single month on the 10th. So if you've enjoyed watching this video about how to get started in investment, then I'd appreciate if you hit that like and subscribe button. And for those that really enjoyed this video, You may like to watch this video here about ETFs, which shows you different ETFs that I'm looking at in 2024 and why. If you can, hit that like and subscribe button, and I'll see you guys in the next video.